Guys, the prompt is the next thing. If you're not on, get on, okay?
Hello everyone, welcome back to the prompt Zambia. Don't forget to like, share, and subscribe. Today I'm here with a special guest, Blessing. How are you today?
I'm good, Mapalo. How are you?
I'm good. So let's get started. Why did you start doing accounting?
Why did I start doing accounting? Honestly, I wish I had like this profound answer in like this moment, but that's not what happened. I actually wanted to do medicine, but then I went into accounting because I was interested in business, I guess, and I didn't really know what exactly in business I wanted to study.
Mm.
So I did a course that allowed me to study marketing, accounting, business management, and economics. Then in my third year, I had to choose which one I'm going to major in. So
Mm.
that's how I ended up in business and accounting. I guess I just had like strength. I was doing well in accounting, the accounting sector. Yeah,
Okay.
that's why I did it.
So, will you ever go back to school and do the actual doctor thing or say no, no?
Hey, medicine. Hey, say no.
All right, cool. So, what are some of the benefits of having accountants or doing accounting in society?
Um, well, because I'm an accountant, this answer might seem biased, but I think accountants are like we cannot agree that they are an essential part of like society, looking at how prevalent, I guess, or how they show up in almost every sector. Like you go to hospitality, you find an accountant. You go to the medical field, they need an accountant. Like you go to whatever area it might be, they need an accountant. So basically, for me, how I see it, an accountant is like it's like a doctor, but for a business. You see?
Uh-huh.
Yeah, the way your body needs to get checkups and you need to like see, okay, how's this, how's that. Basically, that's what an accountant does for your business. Like they check the health of your business. So for society to function as a whole, you guys need us.
So, would you help me with my taxes? Let's say if I had taxes right now, with the knowledge you know right now, would you help me do taxes? Oh, not yet. Uh,
Well, if you're not making any money, yes, because then I'll just have to file a new return. um, no, but I can do something. I don't have enough practice to like, but I can do something. I can, because I know most of the deductions. Yeah.
Okay. So by deductions, right, for people who don't know about that, that is like being exempt from something or what? How exactly would you code it?
Yes, that's exactly what it is actually. It's there's some certain things when you're making a what a tax there's an accounting profit and a taxable income.
Mhm.
So when you're coming to taxable income, there are some things that you should add back and some things that you should deduct. So
Mhm.
basically that's what it, for example, what do you call it? Interest. Interest is a deductible expense.
Mhm.
Yeah. There's something that you can deduct and something that you need to add back.
Okay. So by interest, like are you telling me the money I'm getting is like a loan or something? What do you mean by interest? Because I know that you certainly deal with banks, but you're talking about income, so now I'm confused.
Okay. So um interest is an expense, right?
Okay.
Yes. So you charge what's this? You have taxable income, right? You have the amount that you've made.
Mm.
That's how much is supposed. Then you find the percentage on the taxable income, right? Okay, I don't know if I should say right because I don't know if you know if you don't know. But yes, you do like 30% for companies, for example, you might do 30% on the taxable income. So interest is how much you're paying to the right.
Uh, paying
So
to the
sorry,
paying to the what?
to your loan,
Okay.
like interest is loan, right?
Uh-huh. Yeah.
Uh-huh. So oh, on your, I guess I don't know if I call it accounting profit, you can remove the amount that you paid on the loan and you'll be excused from paying tax on that amount.
Okay, okay, I get you. I get you.
Yeah.
Okay.
Yeah.
So what is revenue expense principle? I don't know if I've said it correctly.
Yeah, I think you have said it correctly. Well, I know it as like matching principle, but it's the same thing.
Mm-hmm.
Um, basically in line with accruals concept. I don't know if you heard of the accruals concept. There's the accruals concept and the cash concept. So for the
Mm-hmm.
accruals concept, you record revenues and expenses at at the time that they occur. Then for the cash concept, you get the money or you record them when the money is received or paid. So for the revenue and expense principle, basically they're saying that um, when revenues are happening, like the revenue amount should be equal to the expenses amount that the business is incurring. They should be matching. It's called the matching principle, apparently.
Okay. So revenue is the money that I am making, right? So now when you're talking about expense, so are you saying expenses in terms of what? Like it should equal the amount that is coming in, or what do you mean by that?
Yeah, exactly that. Like I don't know why it's like that. I don't even it doesn't make sense to me. But apparently the revenue that is coming into the company should equal the uh expenses. That's like being emitted, released, paid out. Yeah.
Okay, okay, okay. So is there a difference between that and object principle?
Yes, actually. There are five basic. There are a lot of principles actually, but there are like five basic principles. So what you mentioned, the revenue expense principle, which is the matching principle, is one of them. Then the objectivity principle also that you've mentioned is one of them. So this is just basically saying that um accounts should not be biased, should not be based off of how you feel. They should not be creative, because there's this thing also called creative accounting, where managers sometimes can mess with figures to make themselves get bonuses and things like that. So objectivity, you should like it requires what do you call that? Information, like facts, like you should have receipts and all of that to back up the information that you're claiming
Uh,
that the company is a certain way. Yes.
uh, So that is the creative accounting legal or something? Because what's the difference between creative accounting and fraud? Because I think fraud is in the same area, if I'm not mistaken.
That's a great question. um, well, it could. Okay, you see, that's everything is bad for your health, as they say. Too much of everything for your health. So, to a certain extent, you can do creative accounting. So, creative accounting is where, because we have the conceptual framework as accountants, but not everything is covered in the concept. Like there are some things where there's no actual specific way of how to record them, and then there are some things where you have options. For example, you have the cost principle and you can use revaluation model.
Mhm.
Yeah. So it's in such cases where you can use creative accounting, where you use management and wisdom and like, okay, it's better we record this like this, or there's no record for this, so we can do this. But when it starts going into fraud, when you're now messing with the figures to make a higher profit, or for example, this is an example that was usually given like in class, where you sell an asset at the end of the year so that your revenue can look like it's a lot.
Okay.
Then at the beginning of the year again. Yeah.
All right. No, it makes sense. So, what is macroeconomics and why do countries use it, or how does it help others to invest in this country or look at the economy?
Mm, okay. Wow, microeconomics, that's like best, yeah. um so microeconomics is basically like the a study of how like individuals and like small businesses, I guess, make decisions on how they're going to utilize their scarce resources, because everything we have is a scarce resource, like time, our money, scarce resource. So economics, we learn things like the law of supply and demand, diminishing utility maximization, and those are like, if you I guess explain it in like proper English, those are just basically everyday things that we use. Like the low supply and demand. When goods are in high demand, the price goes up.
Yeah.
When goods are in low demand, the price also has to reduce. Yeah, so that's basically things like opportunity cost. Opportunity cost is the value of the second best good forgone. So that's like basically what we do every day. Like you go to a shop and you look at, okay, I want Hungry Lion and I want pizza, and this is how much I have. So if I don't get pizza, then I'm missing out on the value of getting the pizza, and I'm getting the value of the Hungry Lion. So
Okay.
yeah, but in more professional and more serious situations. Yeah.
Uh, yeah. So let's say, right, like, why do we need accountants? Like, let's say billionaires or trillionaires. Why do they need accountants? Like, they can count their own money. So how does the accountant know? Because basically, I'm paying someone to use my own money. That doesn't make sense. So, as an accountant, from your perspective, how would you defend your job?
That's actually a funny question. That I'm paying you to use my things.
Yeah.
um, but yeah, that is a good question, and I feel like there are certain things, right? In like the same way as I said, I think accountants are like doctors, but like for a company, and there are certain things that maybe I could have low blood, right? And I could be fine, and I could, like, I don't know what's wrong. I just always say I always feel dizzy, but I don't really know what's wrong with me. Or I wouldn't even be feeling any type of way. But if I go to hospital, a doctor will be able to tell me like, nah, gee, that's not okay. Like, you're not okay. Like, your hands are white, shiny. Yeah, you're not okay. In the same way, there are certain things that um a billionaire wouldn't know that they are doing wrong. I guess, especially if they have a company. Like maybe there's this thing called like payable, what's it called, average payable period or receivables period. Like you might not know that maybe you're taking too long to get back your money from suppliers, and that's affecting your ratios. Or you might not know that you're taking too long to pay back suppliers, and then now they can't give you goods. Now you have stock outs, you're losing customers. So there are certain things that you may be the owner of the business might see the bigger picture, but for the accountant, they'll find the root cause in their financial statements that's causing that problem. So that's why you guys need us, because we see what you can't see. Yeah.
Yeah, yeah. So to go along with what you just said, right? Seeing what we can see, it also deals with ethics, right? Ethics
Yeah.
and sustainability. So how does that go hand in hand with accountants? So what happens when they have bad ethics and also good ethics, and where does the sustainability come in?
Mm, okay. Okay. Um, well, actually, I'm doing ACCA, and ACCA is like really big on ethics and sustainability. We have like a whole course called Strategic Business Leadership, where we learn about like ethics and sustainability. And like ethics is just basically like, being upright, good morals, and all of that,
Mhm.
and integrity, honesty, and in accounting. Have you ever heard of the narrative accountants are thieves?
Yeah, more like
Yeah.
lawyers and liars. The same thing.
Yes.
Yeah. Uh-huh.
Yes, I think ethics and sustainability was not like a big deal before, I think, but after there've been situations of like fraud and pyramid schemes and all of that, and that's why ethics is really coming in. Like people are really trying to bring in ethics into accounting, because we really do deal in a, like, at the end of the day, I'm the one paying the financial statements. I show you what I want you to see.
Yeah.
Like what I tell you is what you believe. So I guess ethics just comes down to, in as much as it can be taught in class, in school, it just comes down to who you are one day. And it's very important in accounting, because financial statements have what we call materiality.
Mm-hmm.
So materiality is the ability of how can I put it, a transaction to affect the decision of the financial statement users.
Mm-hmm.
Okay. So if I don't have ethics, and I'm bringing I guess derailed financial statements, it affects the decisions that you make. Like the main users of creditors, suppliers, employees and investors. Investors might be investing in projects that aren't even making money. So I guess ethics affects, in at the end of the road, affects the profitability of the company as a whole.
So
Yeah.
The question from all that would be, how can you know that this person is legit or a liar or a crook? Like let's say me as an individual who's not an accountant, and then you
Yeah.
as an accountant. So how can I spot a liar and how can you, for example? Oh,
Okay. Well, that one, honestly, that one is a bit difficult. One, you just need to be a really good judge of character. But I guess you know how the Bible says nothing. Is it the Bible that says nothing is hidden under the sun? Like one, eventually you get caught. But also on a more professional level, I guess this is where cost accounting comes in. Like performance, cost accounting is mostly about performance measurement. So we use performance measurement as a way of how to see how the current management is stewarding the place. So really tell that someone is a liar by first meeting them. So like it's written on their forehead. But eventually, as they are working at the place and they're looking at the numbers, and some things eventually will not add up. But also the best way is to have an audit firm that audits the company for you, who is independent of your. They will catch the liar for you. Yeah, I think, and if being very realistic, I think an audit firm would be very important, and just keep an eye on your financial statements to see the performance measurements, and source documents also are very important to counter check. Yeah.
so you're telling us that first you need accountants, then you need auditors. So just for this, do you know what expense am I looking at, like currently? Like let's say, how much did it cost, like just to get an accountant, right? Like let's say at the minimum, and also an audit firm, or you're not sure.
Um, Looking at how right now there are so many graduates. Even me, I'm a graduate who is, kind of unemployed at the moment. So meaning for the fact that there's so many, there's so much labor, meaning there is cheap labor available. Of course, not just get anyone, that's not quality. It wouldn't be that expensive actually. Like people are willing to work even for 2,500, people are willing to work. Um, so maybe an accountant could be like 2,500, but where it starts getting expensive is the audit firm. That's where things get expensive. I'm not sure how much it is, but I do know that sometimes audits can be very expensive. That one, yeah.
So
Yeah. But you can have no
um,
audit. Maybe they may not be as effective because they are not independent from the company and they could even be working in collusion with the other employees. But you can have an internal, well, okay, if it's a big company, you can have an internal auditor. If it's you just personally, like a sole trader, I don't know. Pray.
okay. So like let's say in a year, how many times would you say that it's important to have auditors? Like, is it just the beginning and the end of the year, or every 3 months? Oh,
um, Depending on the health of your company, maybe you could require more frequently, but I think once a year is sufficient. According to, I think, even the law, I think you can like have one audit. But yeah, once a year. Once a
So
year.
at the end of the year?
Yeah, at the end of the year, when all the financial statements are prepared and everything, well, depending on when your year ends, but yeah, at the end of the financial year.
All right, cool. So what as entrepreneurs, since everyone is now becoming business people, how does accounting help us? Like as individuals, right? So like let's say I don't think I have any plans of doing accounting or being an accountant. But how can
Mhm.
accounting principles help us in like the new businesses that we're starting?
Ah, okay. Sorry. Um, Oh, okay. So you don't. So let's say an entrepreneur, and you don't like. You're not at the point of getting an accountant yet. But how can it help you as a person?
Mm-hmm. Yeah, like the principles.
Yeah. Oh, okay. Um. I think mostly it's just about the record keeping, like knowing how much you're making and how much you're spending. I think that's the basic. I think those are the basic principles that we need to know. Of course, you don't need to know like the the intense things of like financial statements of when to defer taxation and all of that. But like if you know how to prepare an income statement, you know how much you're making and the expenses, and maybe even the cost drivers, what's causing those costs to increase or reduce, that could help you with like efficiency. um yeah, I think you need to know, actually, like I think as an entrepreneur, that some accounting principles, some accounting knowledge is almost essential. It's almost as essential as like some marketing skills, like how marketing is very essential for you as an entrepreneur. I think accounting also is something that you can just brush off and throw away. So if you know how to prepare an income statement, at least know revenue and expenses, I think you're good to you're good to go for some time.
For some time. All right, cool. So, how does cost management affect the profitability of a company?
Okay, cost accounting. Cost accounting is not easy, guys. Let me just tell you. Cost accounting is, you need to practice, and I hope that's what you do in real life. But cost accounting basically also just tells you uh how much you're making and how much you're spending and why you're spending that much. I guess what's driving the cost of the company. So every company is made up of costs. Yeah, every company is made up of costs. Like whether you like it or not, like you're going to spend money on either production, on something at least. Like even if you just do whatever service you're actually providing, even if it's being a therapist, you need somewhere to be, like if it's just your mouth or whatever, you need somewhere to be. Um, so now cost accounting comes in the sense that it helps you manage those costs, because if you don't manage your costs, you're going to end up spending more than you're making and find yourself in maybe even bankruptcy. So cost management just basically comes in the sense that it helps you to be efficient in how you're working to reduce costs, to also be able to know how when you need to order. We have a topic where we learn about like reorder levels and stockouts. You need to know exactly at which point we need to order some more stock to avoid stockouts, because when you have stockouts, your customers going like you always go to this shop and you never find Fanta. Every time you go there, there's no Fanta. Like eventually you going there. Yeah.
Yeah.
So help also avoid situations like that.
Okay. So now what you're telling me is that I should also monitor how much I invest in the business, basically, right? Because a lot of people are like, maybe they think like, oh, I'm just spending way too much money, like in enjoyment or entertainment. But so you're telling me that there's also a thing of where we should monitor investing in the business. Am I correct?
Yes, that's very actually that's very correct way of looking at it. Like we actually that's so smart actually. We just look at like, okay, I need to minimize on my luxuries, and you can find that you don't even spend any money on luxury, but you still don't make any money. And you may look silly because your friends are living their best lives and you don't spend anything and you're still in the negatives. So that's exactly what I'm saying, that you need to watch also how you're spending, even if it's resources that involve the company, because at the end of the day, it's not just about having a business, it's about having a business and making a profit.
Okay. Yeah.
Yeah.
you know. So like I have a friend of mine. So her name is Yamfoa, and then she's like, there's a difference between making money and making profit. So I think that can you know
Yeah.
summarize this whole statement.
Yeah.
Uh,
That's true. That's true.
so when does business law and accounting come in, or when do they meet?
Business law and accounting. That is second year. Okay. It really come for me.
Yeah, I really looked at the syllabus. Like, let's see if she really loves school, and she says, "Oh, study." Can't remember what she said.
I like to understand formulas. um well, okay, so business law. For me, I think generally, like as human beings, like you know how as a human being you need to know your rights. Like when you don't know your rights, you suffer things that you're not even supposed to suffer.
Mm-hmm.
So for the fact that firstly, business law, what we learn in business law, one of the first things is that there is no mercy for, like, ignorance is not an excuse. You can't say I didn't know. Like if you didn't know, you're still going to get penalized for, for what happened.
Mm-hmm.
So business law as an accountant, I guess, is this helpful in the sense that like it helps you like govern the company of what you can and what you can't do, what consists a contract, even when reading contracts. Like, because as an accountant, you might find yourself on the board and you have to read contracts and you need to know how to translate and interpret the jargon in the contract. You might not understand everything, but at least you have, the basic idea, basic concepts. Because also sometimes the contract is not just signed. Like if there is repeated transactions, even if you didn't sign anywhere, that in itself shows intent of a contract. So if you're not aware of that, even those are the silly things that find yourself in a court case and you didn't know, but you're still liable if you didn't know. Even for things like laying off employees, there's what you call a lieu of notice, something like that.
Mm-hmm.
So if you don't warn the employee beforehand and you just fire them instantly, you owe them their money. So it's all of these things that are found in business law that you might not be aware of, but you might get penalized for. Yeah, and especially also tax laws.
Mm-hmm.
Yeah, tax law also very essential to our accounting profession. When firing someone,
Yeah.
um when firing someone, I think you need to give them like a letter in like maybe 1 month advance.
Mm-hmm.